You know, there's one constant in this world, and that's change. And like, for instance, we can't get credit insurance on Sears/Kmart right now. But I think we can on Penny's. So Penny's is doing better, and Sears and Kmart are not. So if you've bounced around the Paragon website very much, you know, we're always searching for hot topics. One, that would be interest to our prospects and referral sources and brokers, and two, that's Google and Bing and Yahoo friendly. And one of those is non-recourse factoring. We track about 20 keywords that reference non-recourse factoring without recourse, and people are interested. Non-recourse factoring I describe as akin to a living wage. It sounds like a great idea, but nobody knows what it means. I want to talk a little bit, and the nice thing about this URL, you know, it's about 800-900 word article, so it's a little longer than our normal blog, but it goes in the details. People are afraid. A lot of business owners took hits because of the turn down in the economy, and because they took big hits from customers, they lost their line of credit, or they became unbankable, or they lost their business. So fear sells. Fear drives people. So when I'm talking to a prospect, or talking to a prospect with a broker or an intermediary, and if they took any kind of hit, and many of them did in the last 7-8 years, they're very interested in our credit protection program and how it works. Well, basically it's this, and as this reference in the blog, Paragon has accounts receivable insurance, and what that does, we have the insurance policy, and we pass on the protection to our customers in the form of credit protection. And what that means is we become their de facto credit department. I hope clients use us as a selling tool. For instance, when I'm talking to a prospect, I say, hey, let's say you sell to 5 people and you want to sell to 10 more people. Well, instead of spending $60,000, $70,000 on a credit manager, including in your factoring costs with Paragon, you get that for free. So give me the list of the 10 people that your salespeople are going to call on, and I'll say, and we'll look up their DNBs, and we'll arrange for credit insurance, and we'll say, great. Prospect A, $50,000 in credit insurance. Prospect B, $100,000. Prospect C, $200,000 in credit insurance. So then confidently go out there and try to book the order. But prospect D, he's a cockroach. Don't even waste your time. So, you know, I'm a big fan of living to fight another day. And the owners of Paragon are entrepreneurs. You know, they started Paragon at a kitchen table 21 years ago, and now we do $100 million a year. And we think credit insurance is the right thing to do. And by the way, less than 20% of ABLs and invoice factoring companies utilize credit insurance. One, it costs. There's a cost associated with it, 30, 40 basis points. And two, you have to have a strong balance sheet. Not every finance company will qualify for it. So how it works, a prospect typically fills out an application, and they'll list their 3 to 5 largest clients and about how much business they're going to do with them and what terms. So for instance, let's say, and I'll make somebody up, you're doing $50,000 a month with Comcast, and Comcast takes 60 days to pay you. So at any point in time, you're going to have $100,000, 50,000 times 2 months out with Comcast. And under our agreement with you, we advance 80%. What is covered is 80, as long as we have credit insurance before we buy the insurance, we always do, unless it's Walmart, who they're one of the few people we're not worried about filing bankruptcy one of these days. Hold on, somebody has a question. Let me get to the point here. Well, I can type and talk too. So like for instance on Comcast we'll get $100,000 in credit insurance, and what is covered is what we advance in our fee. So for all purposes, on 100 grand in invoices bought at Comcast, 80,000 in principal is covered, and then let's say our fee is 3% for 60 days. So 83% is covered for our client, and that's how it works. So let's see here. What is the next? Oh, a couple things I want to talk about. So another thing, you'll hear prospects from time to time say, well, you're not going to contact my clients, are you? I mean, won't that look bad? Well, the nice thing about always offering credit protection and AR management, we're not calling to beat up their clients. We're calling to verify that they're happy with the quality, quantity, and timeliness of the goods or the service, be it a hard product or staffing. So in some ways it protects. We're just the accounts receivable department outsourced by our clients. And we're verifying that the customer is happy with the quality, quantity, and timeliness of the goods they received. And then they have all the paperwork in their system so those invoices can get paid in 30 to 60 days. So that is what's covered under non-recourse factoring. One. Two, that's a good way to attack a question or a problem people occasionally have with factoring. And that is, it's a good thing, because most times bills get paid because they were poorly presented. Bad paperwork, entered wrong in the system, bad portal, and we alleviate that. You know, our account executives, our relationship managers, they've all got 10 plus years in verifying invoices, and they have a friendly professional tone with our clients and our clients' clients, the account debtors. So another point, if you look on the URL, Paul has pulled down of what if my customers just don't pay me, and like most questions, you answer back with a question, well, what do you mean? If somebody's been paying you and they're credit worthy, why all of a sudden aren't they paying you? You know, bad paperwork, they've changed bodies in the accounts payable. We really don't get excited till the money's out 90 days. And some big companies just have a history. I'll use a name because they no longer exist, but West Tower, who owned all the cell towers, who was critical, we had credit insurance on, they had a history of paying their clients in 75 days. So many times our customers wouldn't take the advance until they really needed the money. So, but we were fine. We had credit insurance. I think in the macro we had 4 or 5 clients doing business with West Tower, and let's say we had $1 million in aggregate credit insurance that we passed on to our clients as credit protection, and we were okay with them taking 75 days. I tell you, besides working capital and credit protection and a free credit manager and AR management, another great thing typically about our clients who did not use from when they have Paragon to if they start using Paragon, the DSO, which is the days sales outstanding, you can see that in kind of the middle of that one bullet point, that typically goes down. And for your information, the average time that big companies in America are paying little companies is 43 days. We've seen it as high as 50 and maybe down to 40, but it bounces around 43 to 46 days when we look at the entire portfolio. So another important point that I'd like to make is because of credit protection, non-recourse, the way Paragon does it, We tend to get a lot of prospects and new clients that only have one customer, or they only have one or two main customers. Banks typically, no matter how good a company you are, they hate it when 100% of your sales are to one customer, even if it's Walmart, because if you make Walmart mad or Walmart does a stock change, it can ruin your business. So think about Paragon when you have single debtor or high debtor concentration. Because the way we do things, we have many people in our portfolio that only have one or two big clients. So if Paul, if you would, why don't this time we open it to either questions or chat, and I'll let Paul, who's helping me, who's my web guy, who's going to be talking about the other, we'll open it to everybody, and I'll take some questions. And I think Robert has his hand raised, so if, Paul, you can figure out how to let him ask away, we'll take that, or any other questions or comments. Yeah, I think we have both chat open and, well, I know we have chat open if you look at your little control panel.
Yeah, exactly. Robert, if you still have a question, please type it in the chat and we'll get it.
I don't know. Maybe Paul's pushing buttons. So, all right. Well, I would talk non-recourse factoring when you're talking to your referral sources. I would talk non-recourse factoring when you're talking to clients. It's also, which I'm going to talk about next, it is a great way to sell against the merchant cash in the ACH world because they just give you money and don't really help your business. Great. Any questions about non-recourse factoring and how to use it to sell product? Okay. So I think next, Paul, if you would pull up the merchant cash URL. You know, unless you're new in being a financial intermediary or an ISO or a broker, you might have started out as a merchant cash broker or an ACH lender broker. You know, it's a relatively new phenomenon. When I first started factoring in the 90s, it didn't exist. But it can help a whole class of business that factoring can't help. Of course, invoice factoring is based on the creditworthiness of who you're selling to, and it's based on selling on terms, and it's based on primarily a B2B or B2G, a business-to-business or business-to-government sale. And you know, factoring, you can be anywhere from $10,000 to $10 million a month. And a year or two ago, Hewlett-Packard factored over $1 billion in receivables, so big numbers. Merchant cash first came into existence when retailers, restaurants, healthcare, places that didn't have receivables for a factor could, you know, take 6 months of bank statements and monetize that. So the beauty of it is it's very fast. It has pretty simplistic underwriting formula, and businesses can get anywhere from $5,000 to even bigger, $800,000 fast. It's very expensive money, but it's fast money. Now, especially the last 2 to 3 years, there's been explosive growth. I mean, you'll see Wall Street. I mean, Wall Street loves 50, 80, 100% returns. So, you know, there'll be 150 million put here and 150 million there. You know, factoring, we're not as hard to get as a bank line of credit. We like startups. You can be losing money. You can have damaged personal credit. You can have tax issues. But typically, we can't move as fast as the merchant cash, and we have real underwriting. So, so all factors are scratching their heads a little bit and have lost business, especially the smaller ones. The factors that specialize in $5,000 and $50,000 a month, the merchant cash ACH lenders have really gotten into their business. You know, especially the last 3 years at Paragon, there's a couple things. Um, One, it's affected our business because of the liens. There's, somebody will call us up and want factoring, and we'll say, well, do you factor now? Do you have a line of credit? No. And then we'll do the UCC search on them, and we'll see that a merchant cash guy has filed on their receivables and their inventory proceeds, and that they're in front. You can't. It's like having two first mortgages on your house. You cannot do that. So they either have to have enough accounts receivable that for us to buy and take out the lender, or another trick. We've partnered with a couple of them larger, more stable. So let's say somebody has 100,000 in ACH loans, and they're getting daily, and de facto they're paying 80%, 90% per annum. So it's ruined their business and they can't get out. But they have $100,000 in good AR, so we can advance 80 grand. But wait, there's 20,000. That won't give them any money, and it's not enough to pay off the existing ACH lender. One thing we'll do, some more of the stable, larger, and ones with a little bit of underwriting guidelines, we've partnered with them where we can advance the 80% or 90% of its staffing company. And if there's a 5, 10, 20, 30 grand shortfall, the ACH knows we're going to fund them every week. So they'll go behind us, and they'll give them that 10, 15, 20, 30 grand shortfall. And then through funding, they'll eventually go away. And instead of paying 50 to 100% to an ACH, factoring, including credit insurance, AR management, and really unlimited monies, because if you can generate the invoices, we're going to give you 80, 90%. Our clients, people doing $1 million a month, might be 1.25 per 30 days. Small guys, 20, 30, might be 2.25. So it is not inexpensive, of course, but with the credit protection and the AR management, you get a lot more than just money. Anecdotally, I've seen prospects with 400,000 in ACH loans from multiple lenders. If many of you know the phrase stacking, which I learned about a couple years ago, and when I first heard it, I go, what the heck is stacking? Well, if I fund someone, and we typically file on their inventory and their receivables because we're going to fund against all their receivables, well, then a merchant cash ACH lender might be behind us. Well, they have nothing. And then there might be another ACH lender behind them. I've seen 4 or 5 ACH lenders all stacked one on top of the other, 400,000 in ACH loans, and really none of them have any assets. And sadly, their only likely choice to get out of that morass, that mess, is bankruptcy. And it makes me sad. Just a personal note, people can't pay 70 to 100% for money forever. And if there's ever another downturn in the economy and these businesses start to fail, the ACH MCA bubble could be bad, and it could ruin a lot of lives. So we have an interest rate environment where solid lenders can borrow money at 2, 3, 4%. What happens when interest rates go to 7, 8, 10%, and people want these same kind of returns? I personally, I don't know if it's 6 months or 6 years, but when the ACH MCA bubble happens, it will not be pretty. So as a broker, intermediary, what steps should you take? And also, I mentioned, how can Paragon work with existing prospects? Well, for those of you who had done this very long, you really need 3 to 6 factors, and you probably need 3 to 4 ACH MCA lenders. Paragon, we like everything but third-party healthcare and true construction, third-party payees on construction where you got progress pay and lien rights, and suppliers need paid and pay when paid clauses. So, like for instance, we get construction factoring leads. I have 2, 3, 4 construction factors we send them to. You know, we're just like you. We generate hundreds of leads every month, and they don't all fit our box. So I try to reciprocate. Whoever's sending me leads, I send them leads too. So you're probably going to need 4, 5, 6 different factors: a couple medical, a couple construction, a couple small trucking, and a generalist like Paragon, credit insurance, Paragon, 100% concentration, Paragon, tax issues. We're very good at that. So your goal is to get paid, so just have the right sources and know that they really fund deals. But one thing, Paragon can take out existing high-cost lenders, and we can also over-advance from time to time, above and beyond the 80 and 90, if we think it makes their business more likely to survive and a better business. And then we have partnered with a few select ACH lenders to give them a hybrid product, our factoring and PO funding and a little bit of money. And many of these people with high amount ACH loans have tax issues. So they're trapped in a box anyway, but we're pretty good at negotiating with the IRS on subordination agreement and tri-party agreements, because the IRS realizes if Paragon dumps fresh money into a company, they're more likely to survive and to make their tax payment plan payments, and we'll facilitate that too. So any questions or comments about MCA companies and factoring companies working together, or how you can work with Paragon and MCA companies at the same time? So, oh, and it just, another anecdotal, all the merchant cash companies, the Cans, the Yellowstones, the Rapids, all the big boys, they all approach us because they want our turn downs too. So that area is ripe for industrious brokers, intermediaries to find people. Okay? Any questions about merchant cash companies and working with factors? Okay. The other thing is, hold on, let me shut my door. There were underwriters chatting outside my door, so I went and shut the door. And then last, I'm going to talk about targeting the non-bankable company. And Paul, if you would, go to the credit union and community bank. We have 2 URLs. The first one is just directed to bank turndowns. And here's a big program I put together. I'll tell you a little bit of the history. Thousands of small banks in America, maybe tens of thousands, all had a factoring program through a company out of Nashville called Business. It eludes me right now. So every little bank, especially in Florida and Georgia and the Carolinas, since I'm in the South, but all over the U.S., they offered factoring. And they all shut her down because they had tellers verifying invoices, and it just didn't go well. So it went away. So most bankers with any kind of history, are familiar with factoring, and some who did it. Now, there's a few still, bank-owned factoring. SunTrust, BB&T have factoring divisions. Crestmark is a bank that is more of a factor than they are a bank. And there's many small banks that have trucking-only factors. So banks are still in the factoring business. But, 90% of banks aren't in factoring. And they like to refer business out to non-competitors. I'm a big fan of calling on commercial lenders and branch managers. Like, for instance, Paragon has a line of credit, And the bank we have a line of credit with has about 100 branches. Well, I always get the Excel spreadsheet of every branch manager, of every commercial lender, and of every assistant branch manager, because, you know, if we're a factor wanting to do deals 50,000 to $1 million, well, that's bank turndown size. And we're not a competitor. I like to describe Paragon as the bank's farm system. They get to keep the depository relationship. They get to keep the wiring the money. They get to keep insurance. They get to keep cash management. They get to keep checking, savings, credit card, all that stuff. I just want to grow them up. My goal, if it comes from a bank, is to keep the client for 6 to 24 months, grow them up, and then cheerfully hand them back to the bank. One of the things Paragon enjoys doing, you know, we typically have 1 year or so contracts with our clients. But the referring bank, if they ever get to the point that that they can go get a line of credit at the bank, we'll let them out of the contract with no penalty, because it's the right thing to do, and we love helping, and the bankers are ecstatic. Also, we have intercreditor. There's a couple banks. I'll give you an example. 2 different banks had $400,000 lines of credit with their customers, but the customers needed more money. We had one client that was a machine shop, and they're doing work for Boeing. So the bank was kind enough to carve out the Boeing receivables because it was new increased business, and Paragon only factored Boeing. So again, the bank can enjoy not only the banking relationship, the depository, but they can also enjoy the line of credit, and Paragon will factor X client, X industry, insured typically, and it dumps fresh cash, allows the business to grow, and to be honest, it improves the bank's position. And so, you know, you as a financial intermediary, you can make a nice living just being fed by a few aggressive bankers' turndowns in your geographical area, depending on the population density where you live. I mean, I'm in South Florida. You know, I don't know how many hundreds of branches are in a 20, 30-mile radius of here, but I know a lot of them, but I need to know more of them. So by knowing the few aggressive bankers in your area, you know, you can leverage off their marketing and networking. And the biggest thing is, one of the handouts you'll see is networking. And I thought people would enjoy it. I think all these, all but the SEO techniques is in the broker section of Paragon. But you put yourself in the banker's shoes. What is his or her worries and needs on a daily basis? Well, first, you know, what's everybody's favorite subject themselves? So I'm a big fan of networking. Networking is really helping people, listening to people, empathizing. You're the branch manager. Every day you come in, the first report you look at is the NSF, the bounce check report. So that daily bounce check report, those are all prospects for you. If their company's doing B2B or B2G sales, selling staffing, guard, manufacturing, you know, but if they have business to business or business to government, they're a prospect for Paragon. If they're a retailer and they're bouncing checks, or a restaurant bouncing checks, or a chiropractor or healthcare, you know, dealing with a retail public, a B2C, business consumer, those are all prospects for you that you could place with one of the ACH lenders. So one, every branch manager deals with bounce checks. Every branch manager deals with turndowns. And, you know, if they turn somebody down, there's a very good chance they're going to lose the banking relationship. But more importantly, and one thing I drive home with both business-friendly credit unions and community banks, is if a prospect comes in that does not bank, let's say they walk into SunTrust and they're at Wells Fargo, and SunTrust can't give them a line of credit. Well, if the lead came from SunTrust, or from SunTrust to you, to me, and we fund them, the first thing out of my mouth is, well, great, we're getting ready to wire you some money, and I'm going to wire it to SunTrust. And they go, well, I don't have an account at SunTrust. And I go, well, you better go run to this person at SunTrust who you came from, because that's where I'm going to wire the money. Now, I mean that kind of facetiously. But again, the prospects come and go. The clients come and go. Great brokers, great referral sources, the pillars, those are the people you need to take care of. So, and then, so, you know, Paul, if you go up and down on the credit union community bank page, there's a lot of dense information here. You know, it talks about credit risk. We've dealt with banks where they've carved out the AR and SBA loans. Some are more friendly than others. But all this information is kind of designed from the bankers, from the commercial lenders, from the managers of branches' points of view. And we have this as a PDF. I'd use it, I'd live it, and I tell you a secret. You know, some Paragon, we have a sales force, but it's primarily in-house. I get out and about a little bit, but Dave and Tom, who work here, both work inside. A lot of factors, you know, they have 10 people running around, and some of them make more of a living off their bank turndowns and brokers than they do on direct calls. And then, Paul, if you would go to the other sheet on bank turndowns, which should come popping up on the screen. There we go. And again, you can see, Paul, go all the way down to the footer so they can see that entire We Fund section that's listed in. I think if you go to the bottom of any page, yeah, in We Fund, bank turndown, growth opportunities, tax liens, which, well, I'll probably talk about this the next webinar. But in your sphere of influence, CPA, lawyer, bankers, business consultants, if you become known as a person that can help business get money, even if they have tax issues. But that whole We Fund talks about the pain, the problems, the issues that prospects and clients have, and how, A, we empathize, we understand, we've been funded in that area. So go back up to the top, Paul, to the bank turndowns, please. Great. So this is a little bit about, but A, I'll leave you again with these thoughts. A, put yourself in the banker's shoes. What'll meet their needs, which is typically fixing those NSFs, adding depository relationships. And if you've never, you know, some of you are ex-bankers, some are not. My recommendation, you know, whoever's in a 5, 10, 20-mile radius of your house, become good friends, networking buddies with a banker, and try to feed them business. Because to understand the inner workings and the pressure, you know, in some ways banking is not that much different than car business. Their pay plan changes every month. One month they're supposed to do more loans. Another month, no, go get us more deposits. No, go get us more credit card business. So, you know, they're always looking for, and it's a high pressure, high turnover business. And, you know, it's funny, in our cloud-based CRM, I got bankers that have been 6 places in the last 10 years, and they're great people. They just kind of picked the wrong bank. You know, they go from South Trust to Wachovia, they go to First Union and Lehman Brothers or whoever, and, you know, they blew up. So, all right. Well, I appreciate everybody listening to me talking about targeting non-bankable companies.
We do have
about using non-recourse as a selling tool. And then can factoring companies work with merchant cash and ACH? And now, Paul, you know, many of us found Paragon because we're pretty good at organic search engines, and we put out a lot of material. And everything from the online application to the broker packet and PDF form, zipped, to webinars like this. Well, Paul's been my SEO internet friend and advisor since 1998. So Paul and I have been doing this together for 17 years. So he's very good. And I'm going to turn it over to Paul, and he's going to talk about SEO techniques, lead generation techniques, really, not to do.
Okay.
So thank you.
Good.
And I'll be around for questions when we're done, but I'm going to turn it over to Paul.
Okay. How's everyone doing today? So, yep, Chris and I have been working together for about 18 years. Pretty amazing. So one of the things that we work really hard at Paragon is encouraging brokers to create their own blogs and create really amazing content. So when we do these webinars, we talk a lot about the content and the quality and the length and everything that needs to be done and be done really well. One of the things that we haven't talked a whole lot about is Google and its ability to penalize blogs and bloggers and people that write articles and brokers that may be doing things wrong. And they might not even realize that they're doing them wrong. So we're going to go ahead and go through several items today that I want to point out that you really don't want to be doing and the things that you might want to be doing instead. So one of the things I did was I did upload this list in the handouts. So if you want to download it, you can. Let me go ahead and jump over to it. There we go. And again, I encourage any questions that you have during this webinar, go ahead and just jump on and ask. So the first one is buying links. Buying links used to be really kind of nice. It used to be a real easy way to be able to get high quality links pointing back at your website. So for example, there'd be, you'd sign up for this third-party link provider. They'd have financial sites. They'd have sites based on our niches, like maybe aerospace, and they would buy and sell links. So we'd be able to buy a link from that third-party provider on a finance aerospace website or a wine and spirits website and point back at Paragon. Well, Google is constantly changing their algorithm and they're constantly catching up on things. And now they don't like that because they see it as manipulating the search engine. So you definitely don't want to buy any links anymore because Google's figured out how to be able to identify those types of links. And again, you can get penalized. When I say penalized, that means your rankings can go down. You can have individual pages be taken out of Google completely. And if you're really bad, if you do some really egregious things, they can take down your entire website, which you definitely don't want that. So going on to number 2, excessive reciprocal links. So everyone gets emails, I know we have for years and years, of people saying, hey, if you provide a link to my site, I'll provide a link to your site. I mean, it sounds great, but it's been overdone so much that Google, again, will penalize you for things like this. In the past, it didn't necessarily penalize you for this. They just wouldn't give you any credit. But now if you do some of these techniques, they will literally penalize you. So again, with reciprocal links, for the most part, avoid it. It's okay to have 1 or 2 from some trusted partners. But for the most part, you want a one-way link. You want links from out on the web, from very relevant to what you're doing and the type of topic that your website's about. So relevant websites that match, and having links from those websites to your website. All right. Number 3 is duplicate content. So let me scroll down here. There we go. Google hates duplicate content. I mean, it's something you really, really need to avoid at all costs. And duplicate content could be grabbing someone else's content from another website, another blog, an article. And basically, if you do that, it's not going to give you credit for that page. Some other duplicate content could be, if for some more savvy web users that use WordPress, they might set up their meta tags and their title tags. You don't want to have the same exact title tags. You don't want to have the same exact meta tags. You really want everything to be highly unique. Google is obsessed with uniqueness and value. I mean, that's how they judge your site. They really want a site that's going to be trustworthy and with authority and someone that really knows their topic really well. All right, let's go down here. So number 4 is overusing H1 tags. Again, for the more savvy users, they know that the H1 tags are used to tell Google what the topic of the page is about. And something you really want to avoid is using multiple H1 tags. Be really niche, be very specific with what each page is about. You don't want to sit there and do multiple H1 tags and stuff in keywords and really try to get more out of it than is really there. So Google sees this as being very spammy. Number 5 is internal 404s. A lot of times pages will break. You might have a link, a hyperlink to an external page that is broken, that was out of your control, it was changed. Make sure that you run your site through programs like prositemaps.com, and you can identify all the 404s and make sure they're cleaned up, because Google really wants to see a clean site, again, with trust and authority. And if you've got tons of 404s, if you've got tons of broken links, Google is not going to trust your site as much as a competitor that has a similar site that has clean 404s. Okay. So that kind of goes along with number 4 and 6, is keyword stuff content. Keyword stuff content is when you're really pushing too much. When you write, meaning pushing too much in terms of you've got a keyword, let's say invoice factoring, and you don't want to use the word invoice factoring over and over and over again on a single page, because Google is going to see that as keyword stuffing. Same thing with the meta tags and the titles. You don't want to use the same keywords over and over and over again, because it's going to see it as duplicates, keyword stuffing, and Google just really frowns upon all of that. And Google has gotten extremely smart with understanding concepts more than just keywords. So invoice factoring, invoice financing, receivable financing, Google knows that that's all the same topic. So keyword stuffing can include, even if you use variations in a keyword. So again, you need to write your content based on the user first and Google second. Number 7 is sitemap data. This is another example of where before Google wouldn't have penalized you for it, but they may now if you don't have a sitemap. Generating a sitemap for your blog is really beneficial because it helps Google see the structure of your site. It helps it crawl. It helps it understand the topics, all that great work that you've put into your blog. You want to be able to take advantage of it. So providing a sitemap and uploading it to your site, and then going to Google Webmaster Tools and submitting it can really be beneficial for your site. And again, on the flip side, if you don't have a sitemap, it can actually penalize you. Okay. Number 8 is anchor text overuse, or just not really utilizing your anchor text well. So anyone that's written a blog, written an article, they know that they often hypertext, or they link text within that article or blog to another landing page, to an external website that is relevant. And you really need to be creative with your anchor text. So for example, let's just take invoice factoring for an example. It says invoice factoring in your blog. You don't want to just link invoice factoring. You want to link the entire concept. So that's one of the things that have really changed with Google. Google is no longer just about keywords. It's really looking for concepts. So again, when you link or hypertext something in a blog or article, make sure you're linking the entire concept. And by doing that, that's what I do. And by doing that, you really don't have to worry about utilizing different variations and being creative with your anchor text, because you're constantly writing unique and good content, and the things that you're highlighting are going to the invoice factoring page, and they're going to be different each and every time. And then number 9 is, it sounds pretty straightforward, but a lot of people may or may not think about it, is your website and the speed. You really need to make sure that your website is up all the time. You really don't want to go cheap with like GoDaddy and with your hosting. You really want to get a good quality host that is going to deliver your content fast. So Google literally looks at and compares competitor sites to see who's faster, who's delivering the content the smoothest, the best, who's delivering the best user experience possible. So it's really crucial. And again, you put all this effort and all this time into creating content and creating really great stuff for your network to be able to get leads. And if you go cheap and don't get a site that's going to deliver that properly, you can get penalized for it. So at Paragon, we've discovered WP Engine. We don't work for them. We don't get any cash back, but it's great. All I can say is it's the best hosting company that we've worked with. I'm really impressed with WP Engine and their customer service. So I highly recommend them for any kind of hosting needs. And the thing that I've got here as well is if you want to go check out and do further research on the Google penalties, I've got a link right there at searchengineland.com, which is great. All right, we've got a question. Now, I'm not saying that, well, I mean, not directly through GoDaddy, but if GoDaddy isn't doing, or the question is, are you saying that Google will penalize websites that are created and hosted through GoDaddy? So, yes and no. I mean, not directly. GoDaddy is just going to GoDaddy isn't going to penalize you. But if any host, including GoDaddy, isn't delivering your content fast enough, then that's a problem. You know, that's where you could get penalized. So GoDaddy is super cheap. You know, GoDaddy is. I've heard mixed things about GoDaddy. I've used them on and off, so I've had problems with them in the past. But again, I would just go with WP Engine. You're not gonna have to worry about that. All right, another question. Do you encourage brokers to link from our website or blog to the Paragon site? Sure. I mean, I see that as value for both sides because you're linking to Paragon, and Paragon does extremely well in the search engines. Google loves Paragon, so it's a really good authority and source. Another question is, will I have access to the whole webinar in the future? Yes, we are recording this, and you will get emailed. Oneandone.com. Dominic is asking me if I have a recommendation about one-on-one. I don't. I'm not familiar with them. What kind of speed should I have from Helen? We've recently launched our Paragon Financial.net website, so we've really been looking into speed, and I've been doing all kinds of speed tests. And I would say a page load of around 3 seconds would really be your target. So you don't want to have a site that's going to load much slower than that. So what you can do is you could always Google site speed test, and there's lots of different web pages that will help test your speed. All right, Helen is asking, what if the client goes straight to Paragon after I link you? Oh, well, you need to be careful. You know, you want to be able to get the credit. You don't want them going directly to Paragon. So just be smart with the way you link it. You know, protect your source and go from there. Okay. Does anyone have any additional questions on the SEO side? Let's see. What is the name of the service provider again? It's WP Engine. So WilliamPaulEngine.com, and it stands for WordPress Engine. Let me see. On the client application, if my website redirects to yours, see, hold on, Leonard. Okay, I'm sorry. So, Leonard, on the client application, if my website redirects to yours, how do I protect my client? Again, you just have to be smart with the way you're linking. And I believe, Chris, we ask for referral sources, so you'll get credit. Okay, then Helen's asking, if we give you the name of the client and then send them to your site, will that work? Yes, that will work. So as long as you let Paragon know that you're the referral source, you're going to get credit for that lead. Okay.
This is Chris again. You know, to follow up with Paul, it's funny, sometimes people are on the internet and they're shopping, and within 10 minutes, they'll go to Paragon's site. One of our sister sites is businesscash.com. They'll go through there. There's a couple super brokers that spend a lot of money on the internet. They'll go through one of their sites. So the same person will hit us 5 different ways within 10 minutes or an hour or whatever. And, you know, if it first comes from a broker. So I can't recommend highly enough. Paul, you know, if they link back to Paragon, isn't there a way to set that link up so we know it came from them?
There is. Yeah, we could set up.
You know, one thing, you can literally just pick up the phone or pop us an email. Other thing is, too, if you go to the Paul, pull up the broker section of the broker page on the website and show that to everybody.
Sure.
Go down to the bottom, the referral. We have a couple brokers that every time they talk to somebody, they fill in their name and they fill in the prospect's name on the little referral thing on the very bottom of the broker team. We'll go down to it right there, refer us a deal. So you get off the phone to somebody or have something like this on the site, you fill out your information, which you can auto-populate, you fill out the referral information, this automatically gets dumped with a timestamp into our CRM, and all the salespeople at Paragon get emailed a copy of this. So this is a handy way to protect yourself.
Yeah, and further, I really like the idea of the concept of creating links for all the brokers to put on their sites to be able to pass it through and have that automatically be credited to them. Okay. Do we have any additional questions for Chris? Got a couple questions about the broker links. Absolutely, yeah. Chris and I will go ahead and get that out there and get that done for you guys.
Yeah, we'll come up with an example line of code that you could use on your site. So if you wanted to put, you know, something about us, they click on it, it comes from you, but we can see it came from you too. So.
You're welcome.
But the refer us a deal puts all your information, their information, right into the CRM as a lead. So it's a powerful tool. the other thing about what Paul's been talking about is Google loves locality and specificity. So, if you're physically in Wichita or Phoenix or a suburb of Detroit, and you have a physical address and you talk about the industry and the towns and state, Google will weigh that heavily. One of the things we track is local phone numbers, local cities, local industries, states, and things like that. So, like, we love the wine business. So we make sure people in wine areas or people where they import wines, that Paragon comes up for that. So if you're rebuilding a site or building a site or reskinning your site, think about locality and specificity, that you can have your own little niche in your sphere of influence, okay? Any other questions?
Also, I just grabbed a speed test. So let me go ahead and submit that via chat. If anyone wants to test their website for speed, there we go. It's www.webpagetest.org. And it does an excellent job showing you all the different details. But again, one of the most important elements is just the overall speed and how fast your content is being delivered, making sure that it's good for different devices, the tablet, your cell phone, mobile, everything.
Hey, Paul, a quick question. The MP3 of this, where will it be on the site, and how soon will it be up?
It should be on the site. We'll put it on the broker page.
Okay.
And I should be able to do that this afternoon.
Great. So everybody, and somebody asked a question, are you still strong for import-export? We love funding the importing of goods. China, Philippines, Korea, Mexico, France. We love people bringing goods into the U.S. We'll do some export, but maybe 20% of their business, and their client has to be super strong, like Walmart Mexico or the like. There's factors that specialize in export factoring and international factoring. We dabble in it, but primarily we like all 50 states in the U.S. Good question. Any other questions? Paul mentioned speed. We use he just put it up there. We use a couple different tools. Like on the reskin on Paragon, the pictures were too big, the images, so we compressed the images, a certain type of image, the coding, some took, but, anytime we can squeeze a half a second out of here or faster loads, it's a much better client, prospect, broker experience, and Google and Yahoo and Bing like it too. So we're always trying to squeeze time and clarity out of the pages.
Yeah, and something else to mention, it's more important than ever about speed. Again, the cell phone. So many people are visiting the sites via mobile now, much more than in the past.
That's a great point. A couple days ago, we sent out our newsletter to like 10,000 people. And about a year ago, it flipped. More than 50% of the people look at that are doing it on an iPhone, Android, tablet. So in some ways, you need to care more about your website, how it looks on a phone, smartphone, than you do on a desktop.
We've got a couple new questions, Chris.
Yeah, we try to do these once a quarter. So 3 to 4 times a year we do webinars. So this is the end of August. we'll be setting the date in the next one, probably the next week or two. So.
And we've got another question from Dominic Chris, right above.
Okay. Where is that?
I have a client that is only doing business with Hertz Car Rental. What do you think? From Dominic.
Yeah, we like Hertz. I mean, what do they do? Like repair work or moving cars? But yeah, I think we might have Hertz as a debtor right now. Any other questions? Well, we went an hour. I really appreciate, I'm real simple. On the website, you see chats on every page. You can contact me that way. You've got our 800 number. Again, my email is chris@paragonfinancial.net. Thanks for attending our webinar, and have a great weekend. Bye-bye.